think that we're headed to a new price reality. And I know a lot of people think we're expecting in the next handful of months, let's say well into next quarter, first quarter of next year, that we're going to get an explosion in the metals that will drop jaws in
Mhm.
terms of not just gold going up. For instance, gold, it had two bull markets the last 50 years. They were both eightfold moves, bear low to bull high,
Mhm.
different span of years, but still eightfold move. If we have an eightfold move, we go to $8,000 gold. Why? Because the bear low was 1,050 in 2015. Okay.
Right.
Forget that. That's a norm. Okay. Uh, Silver's the one we're watching the most because silver will move with gold. It always does, but to a lesser extent over time. It's underperforming gold. There are
Mhm.
times when it outperforms, times when it underperforms. Right now, it's dirt cheap relative to gold, and I think it's going to go ballistic in the next 6 months. And there's certain reasons for that. You can look at a price chart of gold and silver, and they're going up. Okay, well, it's a bull trend. No, that's no revelation, right? Okay, anybody can note that. It's the spread relationship between silver and gold that looks like it's ready to trigger an upwave. And the last time it did this, last two times, was in the final 6 months of the 79 to 80 explosion, where silver went
Mhm.
from the teens to $50 in 6 months.
Mhm.
And in late 2010 to the April 2011 high in silver, where silver doubled in 6 months. This time we expect even more, but it's going to be compressed in a very short time span. Silver, by all kinds of metrics, is vastly underpriced. We know markets make errors, and I think silver has made a huge error. It's still in a 50-year range, only just now moving out of it. That's not true with almost any commodity,
Mhm.
not where they were in 1980 or even 2011. So I think silver is going to catch up and it's going to shock people. So people's notions of norms could be sacked. You go back and technically analyze that move in 79 to 80, which was already gold, silver had been going up for years anyway. Okay, so
Mhm.
step one. So it wasn't like they suddenly turned into bulls. They were already bull trends. They were going up and they were sort of increasing their angle of ascent. Silver lagged gold, but nice bull trend. Same in 2010. We'd already been in a bull market since the bear low in 2001 on gold and
Mhm.
silver. It had already been going up. And 2010, I think it was like September of 2010, suddenly something happened. And when you look at the price chart in summer of 2000, 1979 and September of 2010, the next six monthly bars went off the page.
Mhm.
And yet, it wasn't because silver suddenly turned into a bull market. It had already been a bull market.
Mhm.
It had already been to some extent accelerating. Why did it go berserk?
Yeah.
We examined the silver gold spread, where we
Uh-huh.
divide an ounce of silver into an ounce of gold, express it as a percent, plot it as a spread chart, and it shows that over the last 50 years, if you find the highest reading each year, where silver was the highest value to gold during that year, in
Mhm.
20 of those 50 years, it's been 2% plus.
Hmm.
That's almost normal, 20 out of 50.
Uh-huh.
Many of those years weren't even bull trends for silver and gold. Okay. In the bull years, 79 and 80, it got up to 6% plus.
Hmm.
In the 2010 to 11 phase of that bull market, it got up to plus 3%. Right now, silver gold is at 1.24, 1.25%.
Mhm. Mhm.
Uh, when we plot that spread back in the 79 to 80 period, and we plot the same spread in 2010 to 11, forget the price chart,
Mhm.
silver versus gold, there's a ceiling that the spread had been living under.
Uh-huh.
When it broke out above that ceiling and it said, okay, silver's going to now outperform gold,
Mhm.
that's when price went berserk.
Ah.
We're in the same position now. We're decimals below a level where if you get the silver ratio to gold, not the ratio, but divide the ounce into an ounce, express it as a percent,
Mhm.
I'll give you
Mhm.
the number. You get above 1.31%.
Mhm.
Divide an ounce of these silver into these gold, 1 ounce into that.
Yeah.
Express it as this percent. When you get to above 1.31, you've blown out a 3-year ceiling.
Mhm.
The spread says, I'm on a rampage. That's when price also rampaged in those two prior bull markets.
Mhm.
It went up in quantum leap form.
Mhm.
Difference this time is we're starting at levels that are already above what had been the 50-year range.
Mm-hmm.
$50, $50, we're now 51, 52, et cetera. So we're into free air. And if you do a ratio study of what happened in that 6 month period, 79 to 80,
Mm-hmm.
2010 to 11, in that like 6 to 7 month zone of acceleration, if we match this 1979 move, we're going to go over 200 bucks.
Mm-hmm.
Okay. If you match the 2010 to 11 surge at the end, we'll go over 100. Okay. The question is, and frankly, if you do a dollar conversion, a real value, the decay in the money unit version, a real dollar value, take
Mm-hmm.
M2 and, et cetera, silver should be at least 200 anyway.
Yeah.
But when a market, we found that there's many other instances in history, and we showed them in a recent report, lead, price of bread,
Mm-hmm.
copper. Go back to the 1980s when silver again was under 50, and look at what happened in those metals at different times. When they came out of a zone they'd been living in for decades and went up, it was usually in a handful of months they'd triple or quadruple in price.
Mm.
And then they'd level off into a new zone of reality. So what we're arguing right now is we think we're on the cusp of moving into a new zone of reality.
Mm-hmm.
And once you get there, you're not coming back here again.
Mm-hmm.
Okay. You know, and I think a lot will be told in the first half of that move. Like if we get that spread breakout this month, then by the end of this year, if we find that silver December or January next year is trading at 100, then we're only halfway into that move. We might go to 200. I'm
Mm.
looking for something meteoric, literally a quantum leap in silver, not a normal type of thing, and it certainly don't reference RSI.
Yeah.
It's going to be overdone RSI the whole way up.
Yeah.
Okay. Anyway, that's the reality I think we're facing, and I think the key ingredient is not that they're in bull trends, it's that spread relationship.
What is the spread now, Michael, more or less?
That's like 1.24 area,
Okay.
but it's
So
been
we're
moving
like,
up sharply for the last 5 months.
uh-huh.
Silver's been gaining rapidly versus, in fact, net on the year, silver's up more than gold. Uh, but the
Well,
spread's been gaining, and we also run momentum of that spread.
mm-hmm.
Spread chart's a price chart, price versus price. Okay, we run momentum of that, and it's at breakout levels already,
Mm-hmm.
well before getting to that 1.31. So we're pretty confident that one, the spread's going to break out because momentum of the spread is already at breakout levels. And then once we do, that's when the tonal change occurs. The game changes.
Mm-hmm. So 1.31 is kind of a key number.
That's a level you ever see that. Of course, silver may be 55, 60 bucks by then, but the spread is saying at this point going forward, we're not going to behave normally. We're going to have a quantum leap. Silver's going to go into a new reality.
Mm-hmm. Well, Michael, I know you do tell your subscribers what you're investing in, and it seems to me I can't see that you're doing much of anything other than silver. And I haven't heard you talk about the stocks too much, though. Bullish, obviously bullish. The gold miners are making, the big producers are making money hand over fist. Free cash flow is just like I've never seen it before.
Yeah.
The margins they are now with $4,000 gold,
Mm-hmm.
even at $3,000 gold. I mean, it's just crazy. And the silver stocks are doing well as well. And I see that something you
Yeah,
put out, I think maybe yesterday or well, the 14th of October, if I could just show this chart.
sure ahead.
Uh,
It's broken out now, that spread. This
right,
shows silver miners versus gold miners going back to 2000 each month. And you can see there's a 4 point downtrend. We're now clear above that line now. So what
right,
it's saying is the silver miners are going to beat the gold miners.
right.
They're going to catch up and beat them. Now, that would echo what I'm arguing about silver versus gold.
Hmm.
So the other thing I'm doing, aside from fairly leveraged silver related positions, is shifting out of primarily gold miners and gold into silver miners.
Hmm.
And I mean the pure silver miners. The interesting thing about silver miners is that most of silver that's produced does not come from silver miners. It comes from base metal miners,
Right. Copper
copper
a lot of
miners, and
times,
so forth.
lead
So
zinc.
what does that mean? Well, it means that if you take the price of silver up a lot, it doesn't really impact their desire to increase production of silver because their margin of producing silver may be 1 or 2 or 3% of their overall production.
Mm-hmm.
So silver has sort of a unique situation there where unlike, let's say, wheat farmers, if you take the price of wheat up, they're going to plant a lot of wheat, okay? Uh, in the case of silver, only the silver miners are going to directly benefit
Mm-hmm.
and more so than will the gold miners or the base metal miners who also produce the silver.
Mm-hmm.
So it's a unique compression there. So you really want to be in the silver miners because they're going to outpace the gold miners now.
Mm-hmm.
And they have been depressed just like silver for an awful long time in terms of what should be reality.
Right.
So
Yeah.
I'm moving a lot of my stuff over now, more focused on silver miners, specific miners.
So if I hear what you're saying, you think silver is just about the most depressed commodity you can think of because you were talking
Yeah,
about bread and all these other things.
yeah, historically speaking, yes.
Yeah, historically
Yeah,
speaking.
yeah.
Yeah.
And when these other guys have moved out of their ranges of reality that prevailed for decades, like copper from 1980 through about 2006, it went off the page to get to the new reality level.
Mm-hmm.
It did it quickly. And then the new reality prevailed for another decade or two.
Right.
Silver hasn't done that yet. Why? Now, maybe it's because it's artificially suppressed by some banks. Yeah, I don't know the argument.
Yeah.
But
Right.
all I can say is they better watch out.
Well, there's been a paper market, Michael, in both gold and silver, and I think that I saw recently that the borrowing rates, the short-term borrowing rates, the lease rates for silver
Yeah.
had reached 100%. There's a
Mhm.
shortage of silver for industrial purposes or whatever, and we know that the banks have been playing this paper market for a long time. And again, what's happening geopolitically, the BRICS are not, I mean, they're taking all the silver and gold off the markets essentially. So you can have all this paper claims against
Mhm.
ounces of gold and silver, but if they're just not there, and the LBMA and New York or wherever
Yeah.
it is, it's not there, and people think they're buying gold and silver when they're just buying claims on gold and silver. That's maybe
Yeah. That's a reason.
1%.
That's one of the good reasons to buy miners.
Right, exactly.
Pure miners. Yeah.
And Michael, you were mentioning, or I had referred to the profit margins that the miners are making now. One thing that's helping them, of course, is a relatively low oil price.